All I see here is cash money. $4 billion worth of cash money. Hey guys, Lincoln here from BoardAcademy.org. Today we're going to talk about IPO B and Opendoor. Last week on September 10th, I started investing in Social Capital's IPO B, which is the fund's second SPAC after taking Virgin Galacti public last year. So Social Capital knows what they're doing. They took Virgin Galacti from a private company to a public company using a SPAC. And that was part of why SPACs are such big deals these days, why everyone is creating a SPAC and why everyone wants to invest in a SPAC, right? You know me, I'm invested in FMCI, in Graph, LCA, right? I'm investing in all those SPACs, and my favorite so far has been FMCI Tattoo Chef. My very first video was on Tattoo Chef FMCI, and in that video, I told you guys that all I saw was money. In this video, we're going to talk about Opendoor and how much it crushes Tattoo Chef and other companies in its own market. I love Tattoo Chef, I love FMCI, but they are no match for IPO B and Opendoor. This company did $4.7 billion in revenues in 2019. That's more than Redfin and that's more than Zillow combined. You can toss in FMCI and Tattoo Chef in there if you want to. They are killing it. So in this video, let's talk about why I'm investing over $12,000 into this company and why I think it's going to be a huge investment for the future, right? Asymmetric returns, asymmetric risk. That's what we preach on this channel. We've done a video on asymmetric risk in the past, and you should go watch that video if you haven't yet, because asymmetric risk is the holy grail of investing. So as I said, I started investing in IPO B last week, and I bought about 200 shares. And today they announced that they're going to acquire Opendoor and take them public. Opendoor is a 6-year-old company that is leading the market in buying and then flipping houses from consumers to other consumers, right? So today, when they announced that they were going to acquire Opendoor and take them public, I bought 600 more shares of the company, of the SPAC, IPO B. And I plan to get to at least 1,000 shares by next week and continue to buy up until the merger completes, right? I am super bullish on this company. I'm going to tell you exactly why in this video, and I hope that will help you understand why this SPAC is shooting up today. As I said before, Virgin Galacti went public via a SPAC by Social Capital, and that SPAC has returned over 70% returns since this IPO. 70% returns in a single year, I'll take that any day, right? The broader market averages about 7 to 10% returns every year. Virgin Galacti has done over 70% in the last year since its IPO. So I trust Social Capital and Chamath to get a great deal and actually take it to the public markets. They've done it before, and I trust that they can do it again. Social Capital raised about $414 million for this IPO B SPAC. And they're going to be joined by other investors in a PIPE deal, private investment in public equities, to raise $600 million more for this deal. And that's going to bring the total to $1 billion to take this company public. This deal values Opendoor at $4.8 billion. That is a lot of money for a 6-year-old company to be valued at. Previous investors in Opendoor include SoftBank's Vision Fund. Vision Fund, the same fund that has invested in Uber, WeWork, ByteDance, you know, the TikTok people, Cruise, and so many others, right? You can take a look at their investment portfolio. They may be controversial, but they have lots of money and they make big bets on companies that they really believe in. We haven't really talked about exactly what Opendoor does and how it makes its money, and so far, it's already looking like a big deal, right? There are big names behind this company. Opendoor is the leader in the offers market. And in this business, what Opendoor does to make its money is buy homes from homeowners and then sell those homes to other people who want to become homeowners. And they make their money on the spread, right? On the margin between what they buy at and what they sell at. So they buy low and they sell high, right? That's just the basics of the business. And how they do this is by leveraging machine learning algorithms to determine what the perfect price is for any given home in their market. And they make an offer for a house. If a user wants to go on and sell their house, they can just open their app and say, hey, I want to sell my house. And Opendoor will say, okay, we'll give you an offer in 24 hours once you give us the details of your house. And in 24 hours, we'll tell you what we believe your house is worth, and we'll give you a cash offer. And you get 3 days to say yes or no. If you say yes, we will buy your house in cash, right? All cash. And then they'll take that house, they'll fix it up, renovate it, and make it look beautiful, and then sell it for more money to some other buyer. And then they make their money on the spread. Zillow has tried doing this in the past, but they couldn't compete with Opendoor. Zillow is way older than Opendoor, and Opendoor, the startup, is leading this market, right? They are doing very well, and they're just getting started. Opendoor operates in 21 markets, and in 2019, they sold over 18,000 homes. 18,000 homes they sold in 2019. That's amazing, right? And that's how they reached their revenue of $4.7 billion in 1 year. $4 billion, nearly $5 billion is a lot of money. For a company that's only 6 years old, that is a very impressive feat. But Opendoor is not a one-trick pony, right? They don't only buy and sell houses because they're smart. They're building a vertically integrated platform to buy and sell houses with their customer base. They offer them home repair, they offer them home mortgages, they offer them home warranties, right? They're leveraging their existing customer base and their platform to enter other business avenues, right? They make their money from also being your mortgage lender, for also helping you do home repairs, from also insuring your home, right, through warranties. So they are doing many things that vertically integrates the process of buying and maintaining a home. So you know I love money, right? With all of that, with all those business avenues, Opendoor and IPO B by Social Capital, they're projecting revenues of $9 billion by 2023. That would crush Redfin, that would crush Zillow, that would crush all of them combined, right? Their competition doesn't even come close. So there's more good news, right? Opendoor is a company that makes its money off of buying and selling homes. The more homes that are sold, the more money that they make. So if the market permits more buying and selling of homes, Opendoor stands to benefit from that. If you watched my video on the Fed's Jackson Hole speech from a couple weeks ago, you will know that the Federal Reserve's chairman said that they are planning to keep interest rates near zero for a long time into the future, right? That means that interest rates are staying low for the foreseeable future. That means that home buyers will be able to acquire mortgages at a cheaper rate. Their interest rates on their loans will be lower, which means that they can afford bigger and better homes, right? So then that means that Opendoor can make more money by selling more expensive homes to people who have better mortgages at lower interest rates. So Opendoor stands to benefit from this Fed's new policy. And again, Opendoor also does mortgages, so they benefit again from that because they offer their customers mortgages. So they can sell more mortgages to home buyers, which is great because then Opendoor makes more money. So they're winning from this new policy across the board, right? This is great news for Opendoor. All these numbers are so big. Opendoor is just crushing it. The company is doing revenues in billions of dollars per year, not millions. Right? Tattoo Chef is projected to do about $221 million next year. Opendoor is projected to do $9 billion by 2023. Let's compare Opendoor's current revenues to other companies in this market and around it, right? So let's look at Redfin. I'm investing in Redfin. I have about 100 shares in Redfin right now. I actually took about 20 some shares out of Redfin to put into IPO B today. So because I believe that IPO B is a higher growth rate and I will be able to make my money back much faster. And if I want to, I can put my money back into Redfin once I make my profit. That is a way that I can have the best of both worlds. Get into IPO B early, make some profit, and then put some money back into Redfin and keep them both. So anyway, let's talk about Redfin's revenue. In 2019, Redfin did about $1 billion in revenue. And then there's Zillow, the bigger company. In 2019, Zillow did $2.7 billion in revenue. Again, Opendoor did $4.7 billion in revenue in 2019. 4.7 compared to 2.7 for Zillow and 1 billion for Redfin. This company is just crushing it and is much younger than those two. It eclipsed their revenues. This seems like a no-brainer to me. This investment seems like a no-brainer. And Social Capital agrees. They believe that this is a 10x investment. right? A unicorn. That's why they're so bullish on it, and that's why I'm so bullish on it. So let's keep going. My favorite SPAC so far, FMCI Tattoo Chef. They're projecting about $221 million in revenue next year. That's hundreds of millions of dollars compared to a couple $billion, right? As much as I love FMCI and Tattoo Chef, it doesn't really come anywhere close to what Opendoor is going to do in the next year and the year before. And I am very bullish on FMCI. I have 1,000 some shares in FMCI right now. I'm going to get Opendoor to that much too. So one more, just for fun. Twitter's revenue last year was $3.46 billion. That is over $1 billion less than what Opendoor did last year. I don't know, guys. This company is just looking like, if asymmetric risk exists, this is the most asymmetric bet that I've made yet. Opendoor is asymmetric. This IPO B by Social Capital is an asymmetric bet. Remember, SPACs are asymmetric. There's a lower floor to how far you can go down, right? The baseline. Social Capital's baseline is $10 per share. So if this deal falls apart, you get your $10 per share. So if I have 1,000 shares of IPO B and they fail to actually complete the merger, I get my $10,000 back, right? 10 times 1,000 at the baseline. If you don't understand this, if you don't understand how SPACs work, you need to go watch my videos on SPACs. I've talked about what SPACs are. I've explained it in great detail in the past. And I've also made a second video explaining why SPACs are asymmetric, why SPACs are a huge deal, why SPACs are such great opportunities for retail investors to get in early on investments, right? They enable us to act like private early stage investors before everyone else gets to invest in this company because they don't know about it yet. We get to invest in it because we know about it. And then they go through the SPAC merger, and then all the big news comes out, and then people are like, oh my God, this new company's on the market. I can invest in it. But no, we've been investing for months through a SPAC. And then everyone else learns about the company on merger day, and they're like, whoa, this new company is great. We should invest in it. And that by that time, we've already gained on the time that we've been investing in the company, right? Through this SPAC. That's why I'm so bullish on SPACs. So that was a lot of information, but there's a lot more to talk about on this company, on Opendoor, on IPO B. But I'm going to do a deeper dive on Opendoor's revenue and their business model, and why I am so bullish on it, and why Social Capital is so bullish on it, why SoftBank Vision Fund is so bullish on this company, and what I believe is going to happen in the future for Opendoor. Social Capital did Virgin Galactic, and it's great. They returned 70% returns so far for investors who got in early. But Virgin Galactic, as good as it seems, is a long time bet. Opendoor is already making lots of money and already leading the market and already has plenty of customers that are continuing to grow. There are 75 million millennials who are starting their life, starting out their home buying experiences, right? Their home buying journey. They are starting to build their families. And millennials love everything internet. We love shopping online. We have a grocery store down the street, but we'll call Amazon or Instacart to deliver our groceries for us in 2 hours because we don't want to leave our house. So if I want to sell my house and someone says, hey, open this app, tell us about your house and tell us how it looks and what's inside of it, and we'll give you a cash offer, why wouldn't I do that? Before this, I'd have to go through a whole appraisal process, go through a real estate agent, ask them to help me out, do a whole bunch of marketing for me, and then they get some percentage of my sale, right? They get a huge percent of my sale, and I have to be charged for a bunch of other stuff that goes into it. But Opendoor says, hey, tell us about the house, and in 24 hours, we'll give you an offer. You get 3 days to accept. If you accept, here's your cash. Move out, we'll do everything else. We'll fix the house, and we'll sell it to somebody else and make our money. Right? Opendoor makes it so much easier for people who enjoy doing stuff online, on apps, on websites, instead of outside dealing with other people. Opendoor just says, hey, talk to a machine and it will handle it for you. They have machine learning algorithms figuring out how much your house is worth, and they tell you what they're willing to pay for it, and you say yes or no, and it's done. right? It's that easy. That's why they make so much money. 18,000 homes sold last year. 18,000. Just imagine selling 18,000 houses. That would take decades in the traditional process. Opendoor makes it take a single year. That's how easy it is. So I am very bullish in this company. I'm investing over $12,000 for 800 shares right now. I got in pretty early last week. My shares are below $15 per share. I'm going to continue to buy. Maybe I'll get to 2,000 shares before the merger because I'm that bullish in this company. Right now, I'm planning to get to 1,000 shares by next week. I'm heavily considering selling out of Redfin and going straight into this company because Opendoor quintupled Redfin's revenues from last year. And Opendoor is selling on the market for $17 per share. And Redfin is at $52 per share. Redfin has a market cap of $5 billion. That's about $200 million more than Opendoor is currently valued at in this SPAC deal. I don't think that Opendoor is going to be worth less than Redfin once it gets in the open market. So I'm heavily considering selling out of my Redfin shares and putting my $5,000 into Opendoor. I'm currently up 143% on Redfin. I've been invested in Redfin for quite some time now. I like the company, but I'm a math guy, right? I'm a computer scientist. I'm a software engineer. I look at the numbers and I say, that makes sense. Everything else is just emotion, right? As much as I love Redfin, I've been to their office, I've been to their HQ back in 2016 when I was interning in San Francisco. I went to their headquarters and I got a tour and it looked like a very nice company. But the numbers don't lie. Opendoor is crushing it. Opendoor is crushing Zillow. So I don't know. I'm heavily considering just rebalancing my portfolio into Opendoor more heavily, into the SPAC IPO B by Social Capital, and seeing where it goes. The risk is asymmetric. My average cost for 800 shares right now is $14.98 or something like that. Okay, if they fail, I lose $5,000 or whatever that math is. $5 times $800 per share, right? It's asymmetric. If they actually go through and complete the merger, then I'm gonna gain tens of thousands of dollars or tenfold that, right? It's asymmetric risk. You have to go watch that video if you haven't already. The link is below. Asymmetric risk is the holy grail of investing. That's why I make such big bets that everyone else thinks it's too risky. But to me, it's risky not to take those bets. Doing a safe thing, to me, is more risky than doing the things that have asymmetric risk, right? Sure, I could lose some money, but the amount of money that I can gain, that I stand to gain, is so much more than what I could lose. So I'm gonna make that bet every single time, right? I'm still young. I can afford to fail sometimes, right? And if I fail, okay, I have time to fix it. I have 40 years left to fix it. By the time it's 40 years from now, if I fail, I'll be right at the same spot that everyone else who didn't take those chances end up at, right? So I don't really have much to lose. That's how I look at investing. That's how I look at asymmetric risk. That is the holy grail of investing. And Opendoor fits that perfectly. So I'm very bullish in this company. I'm going to do another video when I get some more information on the details of this company, right? Their investor presentation looks beautiful, but I want to see what IPO B Social Capital has in their presentation, and then I'll report all of that to you. So if you enjoyed this video and you want to see more like this, then like this video below, subscribe to the channel, hit the notification bell so you know exactly when I publish this new video. I'm going to start publishing more videos about SPACs as soon as I hear about them so that you guys can stay up to date, right? I heard about this SPAC last week and I invested before we knew Opendoor was going to be the target. And then this morning, when they announced Opendoor, as soon as this morning came at 7 a.m. before the markets opened, I opened my phone and I put in a purchase order for hundreds of shares before everyone else came in and ran up the price to $17 per share. There's asymmetric risk, and then there's information asymmetry. Those who have more information are the ones who win. So my goal is to help you get that information before anybody else does. My goal is to help you change your mindset and change your net worth. And my last goal is to help you understand and practice the bull mentality, right? Because the bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. We're not trying to get rich quick. We're trying to build long-lasting, sustainable wealth by investing in great companies that we know and understand and believe in, and benefiting from the appreciation of the value of our assets, right? As they grow, so too does our wealth. And once our wealth grows, so too does our access to money. And as your access to money grows, the more things you're allowed to do in this economy. That's how our economy works. Access to money is much more important than how much money you have. The greater your net worth, the more banks will give you money to do whatever you want with it. So thank you again for watching this video. If you enjoyed it, like it below, share with your friends. Your friends want to know what companies are coming up too, right? And you should be helping your friends learn how to invest better. We cover invest on this channel. We break down the concepts on this channel. We want to help you understand all of these topics and concepts so that you invest with knowledge, right? So that you're not going in blind. And your friends will love to do that too. And you should be helping them do the same. So make sure you share this channel with them and help them practice the bull mentality too. So I'm Lincoln with bullacademy.org. Thank you again and have a great day.